Thank you so much. Good morning and good evening to Andrew. We are all in the daytime except Andrew, who is in the United States, and I think it's 7 o'clock over there. So thank you very much, Andrew. I would like to give a very special recognition and appreciation to Andrew because this webinar has been set for it's supposed to be on 28th, and Andrew, and we move it to 30th, and still Andrew is willing to join us in this webinar. To give a background for this webinar, we had a webinar with the World Council of Credit Unions on the regulatory responses of credit unions globally to pandemic. And of course, Sylvia and Emma joined that webinar. And they both of them proposed that since Philippines is very much affected by the lockdown and cooperatives are very affected by the lockdown, and of course recognizing that our regulators, or which is the Cooperative Development Authority, immediately responded by circulating a memorandum to all cooperatives on how they will respond. So we thought it's very good to have a webinar as well with the regulators, and our objective is to compare notes of what CDA have done and compare notes globally on how the world credit unions respond to COVID-19. And so we invited Andrew Price because at the end of this webinar, what we want to achieve is that for the cooperative sector to be able to express to our respective regulators what are the regulatory support that they need in order to ensure that credit unions are able to face the impacts of the COVID-19. And with that, we have Andrew, who is an expert, who can give us guidance and who can give us guidance on what we need to prioritize, because the case, what we are facing now is very different. We have never experienced this pandemic before, and so everything is new to us. So I hope that at the end of this webinar, our regulators and our members in the Philippines would be able to work hand in hand in order to cope up with the COVID-19. Thank you very much. First of all, I would like to thank CDA, members of the cooperative sector. I would like to give you orientation on the house rules. Okay, this is our housekeeping. All participants are muted upon entry. Please share your comments using the chat box. So we will allow the presenter to speak, and then if we have any comments on that, we can use the chat box. If you can see, there is a little, how do you call, menu there. You can send your comments on the chat box, and then I will be monitoring the chat box. And I think Paul is there also, and he can monitor. The webinar is being recorded and can be provided to any participant that requests it. I'm sure that NACO and PFC CEO will upload this on their Facebook, so then many of our leaders and credit unions would be able to access it. During the discussion, we encourage all participants to communicate through the presentation using the chat box. So I would like to pass this. Of course, I will first go to the second slide, which is our agenda. So this is our agenda for this webinar. Of course, I am doing it's my pleasure to be the moderator. Oh, by the way, I did not introduce myself. I am Elenita San Roque, the CEO of Accu. Our cooperative sector knows me very well. So for the CDA, it's really a great pleasure to meet you today. I have been working in Accu, which is based in Bangkok, for the last 25 years. And we have done a lot of work with the regulators around Asia, and we wanted to reconnect and strengthen our partnership with the regulators in Asia. So I'll explain that later. We will have the opening message from our from the Board of Administrator of the CDA, Director Vidal Villanueva. And then we will have, of course, the great opportunity to hear from our CDA, Cooperative Development Authority, the situation of the Philippine co-ops due to the COVID-19, and of course, what are the regulatory measures that they have already issued for the cooperatives in the Philippines. We are very, very fortunate today because the World Council of Credit Unions, Mr. Andrew Price is joining us from the United States, and he will be presenting to us the regulatory advocacy issues for credit unions. And we will allow a 25 minutes question and answer because I'm sure that our participants would like to express what they are experiencing and what is their request to our regulators. And then we will conclude the webinar. So I would pass this to Sharon. Sharon is the head of the Stabilization Fund in NATCO to introduce our participants joining this webinar. Thank you so much.
Thank you, Ma'am Lenny. Good morning sa lahat. Magandang umaga. And also, maayong buntag sa mga Bisaya. Ma'am Lenny, I would like to present to you the delegates for our webinar this morning. From the Cooperative Development Authority, we are very privileged to have ASEC Vidal Villanueva III, one of the Board of Directors. Also, we have the Executive Director, Mr. Ray Elevaso, the Chief Legal and Regulatory Division, Attorney Elizabeth Batonan, the Head of the Regulatory and Examination Section, Ms. Doris Teodoro, and the Regional Director for the Region 4B, we have Ma'am Chris Villamil. Also joining us are the different cooperative leaders from PCC, 1CISP, PFCCO, and NATCO. Back to you po, Ma'am Lenny.
Okay, thank you very much for introducing. So we have regulators here and all the leaders from our secondary federations. I think that's a very good combination and very good attendance. Thank you so much to all of you. At this point, I would like to invite our director from the Cooperative Development Authority, Director Vidal Villanueva, for the opening message. Thank you.
Good morning to all of you, my fellow cooperators. First of all, allow me to thank the NATCO for the initiative of holding this webinar today. I would also like to thank the presence of PFCCO, the PCC, the 1CISP, and other cooperative leaders from the Philippines. And it is also very welcome the opinions and the ideas of our cooperative experts from our partner co-op all over the world. And I am very thankful to have given this opportunity to be part of this activity today. First of all, we understand that this COVID-19 is really something that we did not expect. And a lot of things are going on right now, especially in our country, in the Philippines. The cooperative sector is in fact suffering a lot in the impact of this pandemic. Because of the impact of COVID-19, we cannot afford to just let our cooperatives suffer the burden alone. So, in behalf of your Cooperative Development Authority, we initiated various regulation measures that would help the cooperative Your Cooperative Development Authority has already initiated various measures to help our cooperatives in the country so that they will not be able to, they will be able to survive this situation right now. We have also negotiated with other government agencies for them also to relax various compliances for all the cooperatives all over the country in this time of crisis. And to present our efforts to help the co-ops all over the country in this abnormal and trying times, we have with us the Executive Director, Mr. Ray Elivaso, to present to all the delegates of this day's event the efforts of CDA. I'll just give my message later. I have to repair my phone. I cannot see everyone, but I hope you heard some of my words this morning.
Thank you very much, Director Vidal. Don't worry, we can hear you. We can see you from my side. I can hear you. I can see also your video very clearly.
Thank you so much for giving me time, ma'am, and I hope that we will have a wonderful discussion today. Thank you so much.
Thank you very much, Director Vidal. Excellent. Thank you, po. So I know that the Cooperative Development Authority has immediately issued a memorandum circular with respect to how credit unions should respond. So we cannot wait to hear Mr. Ray Elevaso, the Executive Director of CDA, for his presentation. Good morning, sir, and thank you very much for this opportunity. So,
good morning, ma'am.
Thank you.
Good morning, ma'am. In behalf of our Chairman Orlando Rabanera, and all the board of the CDA board, we would like to say good morning and thank you very much for inviting us in your webinar today. Also, I would like to sincerely thank Assistant Secretary Vidal Villanueva for leading us today, for leading the CDA team today in presenting to you our actions during this and responses during this COVID-19 pandemic. Good morning also to our Woccu leadership who are here with us today and all the participating federations and cooperatives, as well as our CDA team. We have here with us Director Beth Batonan of the LRRB and other directors, regional directors of the Cooperative Development Authority. Good morning again. We would like to present to you the CDA actions for cooperative development in response to the COVID-19 pandemic. Actions within the period of more than a month. First, we already sensed what is to come, but we just relaxed and listened to the pulse of the cooperatives. But however, in March 3, 2020, because of a bit restlessness from other parts of the cooperative sector, we issued memorandum regarding the conduct of General Assembly. And we reiterated the joint statement of DOH and DOT, Department of Tourism, assuring everyone that it is safe to organize and attend public gatherings, meetings, and festivities as long as precautionary measures are observed. We don't know still what will be coming in the ECQ here. But in March 11, we already sensed that something bigger will come. That's March 11, 2020, and we issued the Board of Directors of the Cooperative Development Authority.
Good morning.
Issued MC 2020-03 series of 2020, or the first memorandum on regulatory relief for cooperatives in view of Proclamation 922. That time, the President already proclaimed Proclamation 922 declaring state of national health emergency. In the light of the above proclamation, cooperatives are allowed to postpone their scheduled General Assembly meeting and election of officers for a period of 3 months from the effectivity of the circular, which is immediate, March 11, or, this is the catch, until such time that state of public health emergency is lifted, whichever comes first. So, our board of directors is looking at a period wherein there may be extension of the ECQ. So that's why the phrase for a period of 3 months from the effectivity of this circular and or until such time that the state of public health emergency is lifted. And then incumbent officers shall be on holdover capacity until such time that the General Assembly meeting and election of officers are conducted. So pending the General Assembly meeting, the cooperative shall open or shall operate on a reenacted budget. So those who opted to postpone their General Assembly meeting and election of officers shall be relieved, yes, to conduct General Assembly and then conduct community programs, activities involving large crowd, and then findings of the CDA for the following violations. We will not fault them for non-presentation to the General Assembly of the required reports, for non-approval of the developmental or annual plan. And also, we require them to inform the Cooperative Development Authority on this matter through board resolution and through letter, later through a letter from their CEO or manager. But they are required that they should still submit annual reports within 120 days after the close of calendar year for their certificate of compliance. Then on March 17, the CDA already organized itself through its online systems, and we readily provided alternative work arrangement for our employees. In the central office, we have the skeletal force and coupled with work from home. And in the regional office, we have work and from home arrangement in the majority of our regional offices. In March 18, we issued a memorandum regarding the extension of effectivity of cooperative name reservation. And then March 23, we issued an open letter to all agricultural cooperatives to please make available online their products for domestic consumption. And on March 23, we amended the first regulatory relief memorandum circular, specifically on the requirement that cooperatives shall submit a letter through email informing the CDA Central Office concerned of the postponement of the General Assembly, signed by Chairperson or Chief Executive Officer or General Assembly. It is a loosening of the regulation again. And the submission date of submission of required reports is moved to June 15, 2020. On March 26, we issued also a memorandum for the utilization of the Cooperative Development Fund, Optional Fund, General Reserve Fund, and release of interest of share capital and patronage refund, loans, and other assistance to cooperatives, because we are seeing a worsening of the situation. That's why we help in the mobilization of funds through issuance of this circular to help members, cooperative members, the cooperative itself, its employees, and also its officers, their officers. So on April 2, 2020, all cooperatives, we issued in support and in compliance to the Bayanihan to Heal as One Act, we issued a memorandum stating that all cooperatives duly registered by the authority which provide credit and other lending services are considered cooperative institutions under Section 2, 0.01A, Rule 2 of the Implementing Rules and Regulations of the said law. But we stated in this memorandum that cooperatives as covered institution should comply with the grace period provision of all credit transactions, 30 days, for 30 days. And the so that they will not be having the penalties as prescribed in the law. And on April 6, 2020, we also issued memorandum circular for the extension of deadline of submission of the annual tax incentives report of cooperatives to the authority due to the COVID pandemic, which is also an act in consonance with the issuance of the Bureau of Internal Revenue, which granted extension of filing of annual income tax returns until May 15, 2020. For cooperative development, so we call that regulatory relief. That's part of the program of the Cooperative Development Authority called regulatory relief for cooperatives. That is a regular program and it is utilized. Such measure is utilized when crises arise, like this pandemic. Other actions of the Cooperative Development Authority to help cooperatives be informed of the various social amelioration and credit initiatives of the government. We aggressively disseminated several programs of the government intended for business rehabilitation and social amelioration of cooperative members, such as DOL, TUPAD, and CAMP program, DA Alpas COVID-19 program, the Department of Agriculture, the DA ACPC loan facility called Plant, the DTI Enterprise Rehabilitation Financing Facility under the Pondo sa Pagbabago at Pag-asenso, the DTI Livelihood Seeding Program or Negosyo sa Barangay, and the Land Bank iRescue Lending Program. We have a standing memorandum of agreement with the Department of Agriculture, the Department of Trade and Industry, and the Land Bank of the Philippines for program partnership. And in consonance with the Bayanihan Act and in support to our mother agency also, we have launched programs. We calibrated our 2020 work and financial work plan to respond against COVID-19, which are reported weekly under the Bayanihan reporting to the Office of the President through the Department of Trade and Industry, under the main programs of cooperative development and cooperative regulatory program. Under the cooperative development program, we have the cooperative supply and value chain readiness program, wherein we sought to enhance our CBMIS listing, or the Cooperative Business Matching Information System listings. And we also posted in the website those cooperatives who are operating within food essentials, money remittances, and banking. We have 1,900 cooperatives plus operating in that manner this COVID pandemic. And it is our list is being updated. We made the list available in our website so that any entity or local government unit or national government agency who wants to transact to cooperatives in this crisis will have a chance to get the cooperative addresses and listings that they could engage these cooperatives. Also, under this cooperative supplies and value chain readiness program, we integrated the we linked cooperatives in the Kadiwa centers as well as in the LGU market outlets, and we have also an ongoing partnership with one of the LGUs, provincial governments, on the coming up of an online marketing project. And number 3 on the list of the cooperative development sub-programs is our Co-op Bayanihan program, which documents all the good deeds of the cooperatives all over the nation, which is posted in our website. We have 7 parts of documentation in the CDA website on the heroism and good deeds of our cooperatives for, number 1, for the frontliners, for the communities they are in, and for themselves, their members and their officers and staff. As well, under the Cooperative Regulatory Program, the sub-program of regulatory relief and ease in cooperative registration is also calibrated to respond to this COVID pandemic. To this COVID pandemic. So that's it for this summary. That's summary. We have other responses not written in this presentation. But your regulatory agency, your Cooperative Development Authority, is awake during this pandemic. Good morning, and God bless us all. Thank you very much.
Thank you very much, sir. I personally want to meet and speak to you personally after the pandemic.
Thank you. I would love to, Mama. I would love to.
Yes. Thank you very much, sir. Thank you very much, Sir Ray. It's very exciting. I've been following the CDA website, and I am also following the Facebook since the lockdown in Philippines, and we are also in the state of emergency here in Thailand. So from March 24, we are working from home, and I have been seeing how our cooperatives are very active in their communities and even utilizing their own fund. Even I think even before somebody told them, they are already putting more their efforts to help their members and communities. While you were speaking, my mind is already, oh sorry, there's a sound. While you were speaking, my mind is already full of ideas on how we can move forward, because it's very great to hear that our government is also participating. You have listed 6 organizations that right after the pandemic can be tapped by the cooperatives in order to help communities and to help members alleviate the impacts of pandemic. Well, at this point, yes. I would like now to give the. At this point, I would like now to invite Andrew. Can we have Paul? Can we have the presentation deck for everyone? Paul, I have one slide. Yeah, okay. For everyone who just joined in, I would like to acknowledge Miss Attorney Sally Cabanges, because Attorney Sally Cabanges is a board member of Accu. I would like to recognize her and those who joined recently. So it's a great opportunity for us to have Andrew Price. Thank you very much, Andrew, for making yourself available, even it's evening in the United States. Andrew Price is the Vice President of Advocacy of the World Council of Credit Unions. He leads Woccu-Advocacy role in front of various international standard-setting bodies, including the Basel Committee on Banking Supervision, Financial Action Task Force, International Accounting Standards, and I think you can read that from your screen. Andrew, well, I have a note here, Andrew, sorry. Andrew holds his Juris Doctor from Nova Southeastern University and a Bachelor of Science in Legal Studies from the University of Central Florida. What I want to say is that Andrew has an experience and professional background on the legal aspect, and he brings that to the World Council. So having said that, I would like to invite Andrew and thank Andrew for this opportunity of having you in our webinar. Andrew, please.
Thank you very much, and it's a pleasure to be here, and it's wonderful to see everybody on this call and cooperating, and from Mr. Elavaza, the foresight that you have and what the actions that you're taking for your credit unions. This is wonderful, and I don't see this in many systems around the world. So I think this is outstanding for everyone to come together and cooperate and share information. Is my PowerPoint up on the screen, or how does this work? There we go.
Yes.
If we can kind of move along to the next slide. So our CEO, Brian Branch, did a couple presentations on this and really talks about 3 waves that are coming at us. You know, the first wave is the one that we're in now, and that's a health crisis. We're all dealing with that and figuring out how to work. I'm here at home in isolation too, in the United States. The second wave is what he characterized as institutional stress. And that's going to be what happens to our credit unions and our cooperatives once we make our way through the health crisis. We're going to see a lot of unemployment, a lot of losses that are flowing through to the balance sheet. And then the third wave is even more long-term. He talks about the global recession that's likely to come, that we're likely to deal with. So walking through these, a lot of these issues are really trying to get us through the health crisis here at first, but we'll also try to think through those next waves that are going to come at us, the institutional stress and the global recession that's likely to come to. So what I'd like to do to bring you the international perspective is walk you through the international standard setting bodies, talk to you briefly about what they've done, because I think it's important for them to give direction down to the national level regulators as far as what they're doing for the international standard setting bodies. I'll walk through some of the operational issues, and then some of the issues, I'll call them advocacy, but it's really communication between the credit unions and the cooperatives and the regulator as well. So next slide, please. Yeah, so the international standard setting bodies, a little background, international standard setting bodies. Now, they do not set law for your particular country, but a lot of the central banks participate in all of these bodies, and they get their directions from the G20 for the most part. And so although what they come out with is not law, a lot of countries around the world look to these standards for what they should do in their particular country. What your individual country needs to do is up to your regulators. And by the way, they're in the best position to know what's best for your country and what's best for your framework. So look at what the international standard settings are doing, but you're not necessarily bound by it. But the wonderful thing that's coming out of all of the bodies is they're all taking action. And the message that they are all sending is flexibility. And that means you need to adjust your frameworks to help us deal with the health crisis that's coming down. You can see here from the Financial Stability Board, ensure that capital and liquidity resources in the financial systems are available, make use of the flexibility that's within the standards to help your credit unions get through the system, to help your credit unions and the co-ops help the citizens of your particular country. Okay, the next slide. Probably, I believe it's on the Basel Committee. The Basel III reforms were finalized this year. They've implemented a 1-year delay in that. They have also put out a lot of guidance. A lot of it, I'm sorry, I don't have updated in these slides for you, but guidance as far as the expected credit loss, how are you going to account for that in your accounting for your provisioning? The expected loss, you're supposed to be forward-looking to see what the expected losses you might incur. They're giving some guidance with respect to COVID about that, basically saying, let's just ignore it from now. We can work these into some of our assumptions later on down the road. Expected capital treatment for non-performing loans, for loan moratoriums. They're giving some flexibility there. With respect to the accounting for losses that you might occur. So if your country is mandating loan moratoriums, they're kind of giving you a pass on having to provision for that allows you to use the capital that you have in your credit union, to get it out of the economy and work for your people. recognizing that that's a government mandated moratorium on your payment, not something that the borrower they're not defaulting on their loan per se, if you will. So guidance coming out of the Basel Committee on that. And then if you go to the next slide, I believe I have, I do have some items in here from the Basel Committee. But likewise, they're also encouraging the use of flexibility and using, not only the capital buffers that are built into your system, allowing you to tap into those, perhaps not to meet some of your regulatory guidelines on capital, maybe let those come down a little bit, just for purposes of getting us through the health crisis as well. And then the next slide, I believe I will talk about the International Accounting Standards Board have also released a lot of guidance on your IFRS 9 or your CECL, whatever your country calls that, your expected losses, is also coming out of the of all the international standard setting bodies as well. So the next slides as well. And there you go. Yeah, and just in case you're also looking for what some other countries have done, we have seen guidance on the accounting standards come out of the European Central Bank, the European Banking Authority, the Malaysian Accounting Standing Board, Prudential Regulation Authorities out of England. They have all issued guidance. So you can see various countries, how they're implementing some of the guidance coming out of the international standard setting boards. All of them are allowing flexibility for their credit unions on some of the accounting and some of the capital standards as well. To let the credit unions do what they do and in your co-ops work in your community and help get us through the health crisis as well. Okay, so the next slide. So a lot of policymaker responses. We've seen a lot of different reactions from governments putting in consumer protection measures to help their citizens get through the crisis, and all of these have consequences back to the credit union or co-ops. We've seen moratoriums on payments. I've seen moratoriums on having to make your payments. I've seen them, for a month. I've seen them for 3 months through September. I've seen them through the end of the year, which, my goodness, is an awful long time. I think that's probably a little bit too long, and the consequences that can have for a co-op kind of frightens me a little bit. But nonetheless, we've seen governments try to do that to help out on their help out with their citizens. Moratoriums on foreclosures, on debt collection, on eviction. These are all things that we have seen governments do. The problem that comes along with that is what a credit union or a co-op needs then is really specific guidance from the regulator. Okay, you mandated this. How do I deal with it on my balance sheet? What is the accounting treatment that I'm supposed to give with it? Do I get a break from having to provision for some of these things? I've even seen, I believe it's I'm going to say it's either Croatia or Romania that extended the definition of default. Normally we see it about 90 days. I saw them extend it out to 150 days, which gives the credit union a little more leeway before they have to declare a loan in default and then start provisioning for it, which of course eats up on their capital as well. That we want them to have that and use that right now to get us through the health crisis. Physical lockdowns and restriction on your operations. I know Mr. Elavazo addressed some of those as well. Allowing credit unions to have virtual meetings for their annual general meetings or their board meetings as well. We see a lot of jurisdictions that are authorizing that. It's particularly in some jurisdictions, they need to have the annual general meeting so they can declare dividends. And so not having the annual general meeting is kind of a big deal for them. So I'm not sure if that's an issue in the Philippines or not. But so allowing that to happen and perhaps pay out dividends without having the annual general meeting or having a virtual meeting are ways that we see around some of those issues. Some jurisdictions require a physical meeting. So allowing the virtual meeting is nice to help us deal with the health crisis as well. Credit unions being declared as essential is also a problem that we're seeing around the world. If you're not declared as essential, then you can't go into your credit union and run your operations and serve your members, serve your customers. So Woccu has a couple press releases out asking for jurisdictions to declare credit unions as essential. We often see the banks get that treatment very quickly, but not credit unions or cooperatives as well. We see a lot of stimulus packages that are coming down to help support small business lending or to provide citizens. And sometimes, you've got to deal with liquidity. If you have, large cash coming in, that might be an immediate problem. Hopefully that's a good problem if you have that happening. And then employee protection measures, items to help your employees, unemployment, some prohibitions on terminating or firing people if you want to let people go because your income or revenue is down. We've seen some prohibitions come down for this. So those are all policymaker responses, which have an effect on the credit union that we've kind of seen from around the world. And then the issue becomes, how is a regulator going to let a credit union deal with that with respect to their balance sheet, to their financial statements and whatnot. Okay, next slide. The accounting issues, I've kind of touched on these. A lot of relief measures that we're seeing from around the world. You change in risk weight for certain loans that you might make, which helps with your capital as well. Flexibility on meeting capital standards. I've seen that all over the world where they're allowing credit unions to kind of go below, not to an unsafe or unsound or where your credit union's insolvent. That's not, that's a different problem if we're at an insolvency level. But if there is room in your capital requirements that you can move down a little bit to help the credit union so that they can have funds that they can get onto the economy to help people make it through this health crisis, that's kind of the sweet spot that you want to see giving some flexibility. North Macedonia was where they went from the time of default to 90 to 150 days. I said Romania, I believe that's wrong. It was North Macedonia. I apologize for that. A lot of these other things, the accounting I've already discussed, so we can go on to the next slide as well. Yeah, designation is essential. I think I talked this into the ground. That is something that we would like to see credit unions designated in various jurisdictions, and we can go on to the next slide. Liquidity and runs on credit unions. I have seen this in the Caribbean. I've seen this in Europe. I've seen this in Africa. Where there have been panics by the public wanting to come in and get cash out because everybody knows cash is king. And so how a credit union can deal with that. And here is where I think there needs to be good communication between the credit union and the regulator. Number one, you want messaging from both the credit union and regulators coming out, to assure people that, look, the system is sound. You don't need to panic. Your money will be there. If you have deposit insurance, that's something that you want to, or a guarantee fund for your deposits. That's something that you want to publicize to give. What you don't want to have happen is people panicking and taking a lot of money out, and then the credit union has a liquidity crisis. On the backside, where a regulator wants to work with a credit union is making sure they have access to central banks or correspondent banks. Sometimes there's prohibitions for credit unions in dealing with correspondent banks. This may be a time, if you have the authority, to consider perhaps relaxing that a little bit, to make sure that a credit union can have the proper liquidity to continue to run during the crisis. Having enough cash on hand, if you have ATMs and operate those, getting those in can be difficult and a challenge, just not only because of the lockdown requirements and how are you going to manage that in a safe manner. All of these are issues that are important for a credit union to start thinking about. But preventing runs on your credit union or co-op, I think, is extremely important. That's an area where I think the credit unions and the regulators need to have a lot of communication with as well. It's an issue I have seen around the world as well. A lot of that is going away now that we're all kind of getting used to dealing with the coronavirus. But early on, I saw several systems I was a little bit worried about, to be honest. Okay, next slide. Credit union response issues. This is an area where I think credit unions and co-ops have an opportunity to shine, to help your members, to help your customers through the situation. One of the things that we have asked for is, regulators to ease some restrictions on some of the loan requirements to perhaps allow them to provide, special loans to help get you through the process that you can do with reduced documentation. I don't want to be consumer unfriendly, but we all know there's a lot of paperwork that goes along with dealing a loan, but we want to be able to make some emergency loans quickly and fast. So that's an area that can be kind of thought through if that works for your particular jurisdiction. We've seen a lot of credit unions engaged in loan restructuring and offering deferred payments, reduced interest, interest-only payments, loan extensions, helping with debt consolidation, a lot of fee waivers. If you have certificates of deposits that have penalties on withdrawals, perhaps waiving those. Financial counseling, scam guidance. There's scams galore going on out there on that, and health information. I think these are all ways that credit unions that we've seen around the world where credit unions are offering, maybe not all of these, but one or two things, one that works for their members to help your consumers kind of make it through the crisis as well. So this is looking at it from the credit union perspective, as far as what we're seeing them do to address problems around the world. Okay, next slide. Member interface response. I think Mr. Elavazo addressed a lot of these that are going on in the credit unions. Having proper provisions if you're going to be serving the public or having meetings and those responses. I think a lot of us know all of these things. I just put a couple items on there that we've seen credit unions from around the world do. I'm not a health expert, so we can go on to the next slide. Another regulatory request, and I heard your regulator mention a lot of these, delay in a lot of the reports that need to be done because it is difficult for a credit union to come into the office and work. We've seen delays in anti-money laundering reports. I've seen delays in some of your required regulatory reporting. I heard some of those alluded to before, some of your tax deadlines, regular examinations, audit deadlines, all of these things. If they make sense and can give a credit union relief so that they can deal with the health crisis and kind of not worry about some of these, deadlines that are, they're important, but, to help us get through the crisis, these are things that are worth considering out there. Okay, next slide. And then I talk about advocacy issues. We've seen a lot of hesitancy. I was pleased with your regulator because it sounds like you're already doing, things to make it work for your particular country. I've seen a lot of regulators hesitant to relax standards. That's against the regulator's nature to do that, and I understand that, and there's valid reasons for that. But the problem is we have a health crisis that's unprecedented before, and we kind of got to get through that. So I think when there's hesitancy to do that, I think what you're doing now, talking amongst each other, sharing experiences, you can look to the international standards and the direction that they're giving you on providing flexibility, and look to the other countries and what they're done. So hopefully I brought some of that to you here today. And then my message for credit unions and co-ops is tell your story. You guys are the financial first responders. You are the fire department out there that's going to help your citizens get through. Tell your story and help them do that, and look to your membership, and then work with your regulator to have them allow you to do that. So always want to do it in a safe and sound manner. I'm not saying let's go crazy, but let's do those things that are important to help get us through the crisis as well. And then I think my next slide, I don't really need to talk too much about. These are just items that Woccu has kind of put out there as recommendations that you might want to consider for regulatory relief. I've seen several jurisdictions around the world offer some of these things, and this is just a list for your reference on there. And I believe I'm about at the end here, and I will there's my contact address. anytime you want to reach out to me, feel free to do that. That's my direct contact information. It may take me a day or two to get back to you. I'm 12 hours difference from you, so I may be asleep when you email me. That's okay. I'll get back to you as soon as I can, and I'm happy to do that at any time. So I will check questions here and see if there's something I can pick up on.
Thank you very much, Andrew. Yes. By the way, Andrew, I received the regulatory guidelines from World Council that you have written, and I have shared that with our member organizations. So Sylvia, NATCO, and PFCC all got them, and I think it's okay to share that with our regulators.
Yeah, please. I mean, it's on our website. You're more than welcome to it. What I'm trying to do that is pull together all the international standard regulations that have been out there, particularly around the accounting, because that's so technical and difficult. So that's the purpose of that guide. It's on our website. Please share it with anyone that you want. We also have a COVID-19 resource page on our website as well, where I'm putting up everything that I told you there, and there's a whole lot more up there as well.
Okay. Thank you very much, Andrew. I think Andrew pointed out very important points. I'm sure that everyone has a lot of questions now. We've been monitoring the questions that you are posting on chat box. Sha, do you have the questions so that we can address the questions?
Ma'am, it's being presented for the question.
Okay, great. Okay, we have this question. What if the primary cooperative decides not to hold a general assembly? I think, and would there be violation? I think this question is directed to our CDA. Definitely CDA. Will Mr. Ray would respond to this question, please?
Yes. Yes. Kindly repeat the question, ma'am.
Yes, Sha, can you put that on slide again, Paul? All right. The question is, what if the primary cooperative decides not to hold general assembly? Would there be a violation or penalty?
First thing is that we have to think that general assemblies are so important to the life of cooperatives. So cooperatives should focus on the option that or hope that someday in this crisis they have to hold their general assemblies. We are discouraging them not to hold general assemblies. However, if the situation really comes in not to allow them to hold their general assemblies, then we have to succumb to that situation, and the law, of course, the ECQ. So we still encourage them to hope that someday and somehow in this year, we are still on April, in the month of April, coming May. And still very early to say that we will not hold General Assembly. It's very much defeatism on their part. In that connection, the CDA issued memorandum circular to guide them on how to respond to the situation, and in terms of thinking of how General Assemblies would still be conducted within this year and the times to come, the CDA is in deep reflection on how we can have virtual GAs, using online applications such as this, because a General Assembly is so important in the life of cooperatives. That's my answer. I hope I answered the question.
All right. Thank you very much, sir, because I think General Assembly does not mean only physical presence. It can, because with the presence of technology now, we can even have our General Assembly using technology.
Yes,
By the
it's
way,
a venue. It's a venue for substantial decisions for the benefit of members, for the benefit of employees, for the benefit of the cooperative itself. So that's how important General Assemblies are. That's why we are thinking of how cooperatives will conduct General Assembly despite the situation.
Yes. Okay. Thank you very much, sir. So we have to have General Assembly, not the new normal. Well, anyway, before proceeding to some other questions, I would also like to emphasize, because there's a lot of substance on the presentation of Andrew. I think there are a lot of scenarios that Andrew have pointed out in his presentation, and I would like you to think about that, because those are the things that we need to focus. Like, for example, Andrew mentioned that we need to have flexibility in the operations of credit unions, because we should be expecting losses in the credit unions. Members would not be able to pay the loans, and credit unions, there will be definitely financial impact to credit unions. Most probably right now we cannot feel it because credit unions have liquidity, but when a new liquidity is not coming out, what would be the guidance for credit unions to mitigate the risk? I think that is very important. Another one is, Andrew pointed out about accounting standard. Definitely there will be, our delinquency will shoot up. But the normal is that based on the accounting standards and based on the regulation for financial discipline, we are making provision par one. So what would be the guidance for credit unions in this? Because if we will follow the regular provisioning according to our standard, all credit unions will be bankrupt. Is that right? Because we need a guidance on that. Another one related to our members. There should be a consumer protection. There's a lot of bailout package coming out from the government. Our credit unions may jump in there. And, as we all know, credit unions are, by principle, is a self-sustaining organization. We need to give guidance to cooperatives whenever we get external funding. How much or how far can we put in our credit union operations in external funding without hampering our sustainability and without hampering the self-help initiatives from our members? Yeah. I think these are the things that we need to focus right now head on. What is our credit union responses? There is one thing that very important for us, which Andrew mentioned. Most of the credit unions are employing financial counseling to their members, because I'm sure that credit unions have a very good heart. They will be able to give loans to their members. The emergency loans is available from the credit unions, calamity loans, but how far our members can absorb? Are we putting them into more indebtedness? So I think financial counseling is very important on the part of the credit union response. So having said that, I just summarize what I think very important highlight on Andrew's presentation, so we can focus our question on that, because I think the CDA has done a lot of job already. Thank you. Sha, next question, please. Okay, our next question is from Ms. Sally Cabangis. She's the Board of Director of Accu. How do we strike a balance in protecting both labor and capital? Businessmen suffer losses, yet they must not terminate their employees. Moreover, work from home does not work for certain types of companies. Yeah. Andrew, would you like to address this one based on your experience, please?
Yeah, I mean, I think it's a great question, and I don't know that I have a good answer for you either. This is the challenge that we have. We see a lot of governments that are coming down with restrictions on terminating employees, and so that shifts your business model, right? I mean, you expect to operate at a certain level, and that assumes a certain amount of income, and now that's being challenged. I think this is a difficult question to answer, but I think the question asks the right question. How do we balance that? Yeah, the truth is we're all going to have to figure it out. With a lot of unknowns out there coming down the pike, we don't know how long this crisis is going to last. We don't know. How deep the Great Recession is going to be. When I talked in the beginning, we got to think through the Great Recession. Every time I think about the Great Recession coming, I just get fearful and I have to stop. Yet at the end of the day, I think we're going to figure out how to make it through. It's a great question. I don't know that I have a good answer for you on that. But part of that is going to have to be in, your regulators in a wonderful position to be able to look at how much capital is out there, what is the financial condition of our credit unions, how much can they withstand before they're going to be insolvent, and then working with the credit unions, to say, hey, what are the best knobs on the dial that we can tweak to help us, maximize our ability to sustain this in the long run. It's a great question, and I'm sorry I don't have a better answer for you on that.
Thanks very much, Andrew. You've been mentioning about capital adequacy in your presentation, and you've mentioned again now. I think I hope that our leaders would also agree, there is a lesson that we can learn from here. Because if a credit union has a capital adequacy, I mean, for our case, it's the institutional capital. If a credit union has met the institutional capital required according to industry standard, which is 10% of the total assets, right. I think they are in the best position during the pandemic. And if a member has also her or his own capital adequacy, I mean emergency fund, I think they are also in the position. The problem right now, as you mentioned, we need to know the financial position of credit unions. I am sure that many credit unions have not met the required institutional capital. So it is a lesson that we can learn now moving forward. So I hope our regulators will really push our credit unions to meet industry standards. And the credit union will also push our members to have their emergency fund equivalent to 6 months of their family expenses to be able to survive in this pandemic. Okay, thank you very much, Andrew, for that. I hope that we answered the question of Ms. Sally. Yes, Sha, do you have some more questions?
What is the definition of a run? Yeah, you'll know it when you have a run, because there will be people lined outside of your credit union wanting to take their money out of your credit union. I mean, you will know when it happens. United States saw it during the Great Depression. The government had to give a bank holiday and shut down all the banks for a weekend and a couple days more to help them get their finances in order, because everybody showed up to the bank to take all their cash out, so you will know it when you have a run. We saw a lot of it after the financial crisis as well. So a run is when there's a panic out there in the public and everybody wants to come get their cash out because they don't feel like their money is safe with their financial institution. They think the economy is collapsing. They think your bank is going to go under, and they're going to lose all their money that they have, perhaps all of their savings that they have in a bank, and they're going to want to come and try and get it out. And to be honest, I have seen that in happening in a couple countries in Europe and in Africa and a little bit in the Caribbean as well. Fortunately, I think with the right education from the regulators and the credit unions, you can prevent that from happening. So that essentially you would run out of all your cash that you have in the credit union. I have seen some systems putting limits on the amount of withdrawals in the EU. I think Estonia put limited to 1,000 euros per week, and they may have done some combination. I think they did 1,000 per week and 2,500 over a month, to prevent large amounts of cash from going out of the system, which of course can wreak havoc on your balance sheet as well. So I don't know if there's a formal definition of a run, but you will certainly know when you have that.
Thanks, Andrew. I think, okay. Next question, please, Sha. All right. With physical and social distancing becoming part of the new normal, how can the CDA push the digitization of cooperatives so that services of co-ops to their members can continue, and at the same time protecting health and safety of employees and members? I love this question. I'm sure that this is for the CDA.
So either of the CDA officials and officers who are here can help me here also. But to answer, we are coming into the new normal, and I think the CDA, because of its ICT preparations, recognize recognize that the system should be also towards digitalization for cooperatives. So we appreciate these things, and we are prepared to do this because of our orientation on ICT and digital economy, and how we operate this office today. We are operated by online systems today. We meet, we plan, we collaborate as an agency. Our board of our CDA board meets, our EXICOM meets, our down to the lowest level. That's why we have a great and deep appreciation of the digital online thing, and we also would like to see cooperatives using these technologies so that they will be protected in terms of their health and in terms of their operation also. We are positive that the online thing will be beneficial to our cooperatives.
Thank you very much, Sir Ray. I hope I am not becoming very aggressive, but I would like to suggest that the Cooperative Development Authority endorse to all our cooperatives to use the Kaya payment platform. As you know, this is the only cooperative-led payment platform in the world, I should say in the world. And currently, Accu, Woccu, NATCO, and PFCCO, supported by the Bill Gates Foundation, is going to take this to the next level. And the next level is to develop an interoperability platform where the Kaya payment platform will be connecting all the payment platforms in the Philippines, not only in the Philippines, but it will go to Asia level. Our discussion right now is that interoperability platform for credit unions will be on a regional basis as a pilot. So I hope that Philippines will take lead and will champion that in Asia. So sir, we are, we are really asking your blessing to take this Kaya payment platform globally. Thank you, sir.
Of course, we appreciate the efforts of the NATCO through the Kaya, but however, we should also recognize that the CDA is a government entity. We have some limitations on that. Plus, of course, that can be talked to with our board of CDA board for clarification and further discussion on that matter.
Thank you, sir. We would like to have your endorsement and blessing. We really respect CDA for the job that you are doing. Thank you very much, sir.
On that note, ma'am, I would like to say something.
Yes, sir.
Regarding the Kaya platform, we have already an agreement with Attorney Futalan, the PFCCO, together with the NATCO, that we will be going around the country to educate, especially the credit and savings cooperatives, all of these financial co-ops, for them to use the Kaya platform. I am saying right now that all cooperatives in the country are using the Maya. So I think it's high time for us to sell among these co-ops all over the country for them to switch from Kaya to from Maya to Kaya platform, which is a co-op developed system. Thank you.
Thank you very much, sir. That's very encouraging news. Yes, attorney, would you like to say something? Attorney?
Yes. Even before the pronouncement made by the national government for an enhanced community quarantine or that lockdown in Metro Manila, the CDA through ASIC Vidal has already done some initiatives to speed up the adoption of Kaya. So I'm happy that he has mentioned it today, because we are in a situation where this payment platform could, had this been adopted in the period that we have been making intense presentation and marketing, had this been adopted by most cooperatives, then I would say that we could have made full use of it. So right now, the efforts of NATCO and PFCCO include having to involve not just CDA, but also BSP. Just last week or the week before last, we did drafted a letter for BSP to allow us to participate in the NRPS. So hopefully this is going to be a wake-up call to our credit cooperatives, because there's really a need for us to touch base and continue to deliver the services to our members, even amidst the pandemic. So I'm so happy that this is being brought out into the open. The schedule has been set insofar as that roadshow that ASIC Villanueva was talking about. We were just cut by the directive of the national government as regards protecting our members. So no physical gatherings can be made. But I look forward to having to pursue, especially in areas where GCQ, the General Community Quarantine, will be declared. So thank you very much, ASIC Vidal. So Ms. Lopez of NATCO and Ms. Paragoya have been very helpful in this regard. In fact, the initiative came from Ms. Lopez and NATCO to write BSP. And for Ray Alivaso to also know that we have been making several presentations to CDA already in the hope that we could speed up the adoption of Kaya. So your records will also show that we have been going to CDA many times, I would say, in the past, and we're just saying that we will continue to pursue this effort so that in the end, we can be truly of service to our members, and we can be also true to what the national government has been wanting the country to be into, and that's a genuine financial inclusion situation. Thank you very much.
Thank you very much, Attorney Glo. I think we are doing good. We're supposed to end at 9:30. It's now 9:18. Well, anyway, but there are many questions, but I would like first to invite Gary Leonardo. He is very quiet now. Gary has a lot of things to share with respect to regulations and advocacy to CDA. Gary is the chairman of the Philippine Cooperative Center, which is considered as the tertiary organization for cooperatives in the Philippines. I do not like to lose this opportunity because I'm sure that Gary will have some questions or concerns with regards to regulation since Andrew is here. So we do not, Gary, can you share before we address the next question? Gary, are you there? Yes.
Yes, I was on mute earlier. I was having difficulty getting myself unmuted. But first of all, I'd like to thank you and Sylvia for inviting me and our co-op leaders to participate in this webinar. I actually raised 2 questions in our chat board. I might as well raise this here as well. In particular, I was struck by Andrew's reference to flexibility. And let me add to that practicality in these times of crisis. No? And in that regard, there were 2 questions, as I said, which I raised in our chat group. First is, would it be possible at all for us to consider the possibility of holding over our incumbent officers by 1 year? Well, in this particular case, it's less than a year now. Again, that's from the point of view of practicality and flexibility, as Andrew cited. The other question that I raised is, well, this is related to your earlier statement about the possibility of us relaxing a bit the provisioning that we presently have. So in that regard, let me share, for instance, that the government is presently considering extending the net operating loss carryover for private companies from 3 to 5 years. Understandably, we cooperatives are tax exempt, so we can't possibly make use of the net operating loss carryover. But instead, I'm just thinking, instead of applying our NOLCO as tax credits in the case of private corporations, can we possibly look into the possibility of applying our NOLCO to our loan loss provisioning? This, in effect, aligns with your idea about cooperatives looking, our regulator, which is CDA, looking into the possibility of relaxing some of their regulations, specifically relating to loan loss provisioning. Hello?
Yes, Andrew. Sorry, yes, Gary. That question is for Andrew, right? Okay. Andrew, please.
For Andrew and for Ray, actually.
Okay, all right. Okay, for Andrew and Ray. Thanks.
Yeah, I think that's an issue for your national level accounting standard setting body to address. I have not seen that type of provisioning. So I have heard of what you have talked about with respect to businesses and their net operating losses and extending those out and carry those for corporations at work. I've not seen quite what you have proposed for credit unions. To me, that would be something for your national level accounting standard setting boards to consider. The issue they may have with that, though, is the purpose of accounting is to have full and fair disclosure of your financial statements, and perhaps you might want to do that on a temporary basis for 1 year. But I would have to defer to your national level regulators to see if they're comfortable with something like that. I love the thinking though. I think it's great. It's innovative. I'm a lawyer. I'm not an accountant, so I hesitate to chime in and endorse something without having an accountant tell me that it's a good idea or not. So I think the thinking through solutions like this though is wonderful. So I applaud you for doing that.
Thank you, Andrew.
Good morning.
Yeah.
Hello, good morning once more. Regarding the holdover of officers, I think we have addressed that in our Memorandum Circular 2020-03, or in the phrase until the national health emergency is lifted. That so whichever will be earlier. 3 months, March, April, May, or until the national health emergency proclamation is lifted by the president. So we don't know when will the lifting of the national health, the proclamation will be done by the president. But he is saying that the crisis on COVID-19 might be not only this May, but to be prolonged to 1 to 2 years. So
well,
we cannot automatically say or have our memorandum circular that saying that holdover capacity for all officers will be 1 year, because we are also listening and observing the goings on in this crisis. So I think, but of course, I am not the board of the Cooperative Development Authority. The board will, I think, study that whenever there is a proposal or a widespread proposal on that thing.
That's precisely my point, Edie Ray.
Yes.
As you yourself said, we don't foresee any recovery in the near future, and instead of us moving the deadline every now and then, won't it make practical sense to decide once and for all to allow the holdover of officers by 1 year at least? Oh no, not at least, by 1 year at most.
May I ask, Sir Gary, is that your recommendation to CDA board, Sir Gary?
It's a suggestion for CDA's consideration.
We will study on that matter, sir.
Okay. Thank you, ASEC Vidal.
That is also very important to us because your suggestion would somehow guide us in order to come up with the guidelines that will be implemented across the country.
Thank you again, ASEC Vidal.
Thank you, sir.
Thank you very much, ASEC. That's very encouraging. Oh, well, Sha, next question. Do we still have many more questions? We have 2 minutes remaining according to our schedule. May I ask the permission of everyone if you would like to extend?
Lenny?
Yes.
We have not heard the response to the issue on relaxing the provisioning. We only had
yes.
the General Assembly.
Right. Yes. Can Sir Ray address that question, please?
On the lowering of deposit liabilities po?
No, sir. It's the
loan loss.
The NOLCO thing.
Provisioning yes. On loan. Yes.
Yes, the NOLCO concept of Sir Gary. Actually, Sir Gary, we are studying very well your proposal, and we will come up with our recommendation on that matter. Because I said that we are studying it because there might be, this is a tax notion. The NOLCO thing is related to taxation. So we have to study it further for our recommendation to our board to our CDA board for their decision. So
yes.
We are not curtailing the possibility, but up to now we are studying it because it might have something to do also with our Philippine PFRF system.
Lenny, if I may.
Yes, Gary, please.
Yes, let me just belabor the point a little bit. What I was thinking is for us to just look into the possibility of applying the NOLCO concept that presently applies to private corporations. So if, let's say, a number of our cooperatives are bound to incur net losses by end of the year due to COVID, instead of carrying the loss over, as in the case of private companies, and instead of these net losses being charged to GRF, to our General Reserve Fund, can we apply this instead to our loan loss provisioning? That's one. Related to that, as I think this was suggested as well by Roy and Ibing, that the General Reserve Fund, that CDA allow cooperatives, at least for now, to use our General Reserve Fund for our respective operations. So in that case, if we don't charge the net losses to be incurred, that we expect to be incurred by a number of our cooperatives to the GRF, then that would leave us a larger amount in our GRFs for continuing use in our operations, because we will be applying instead our net losses to the provisioning, to the loan loss provisioning. I hope I got my idea across.
Yes,
It's not a tax issue at all. We're just looking if we can just look into the possibility of applying the NOLCO concept of private companies to cooperatives.
Yes, the message of Chair Gary is very clear on us, and actually there are already discussions, and by the regulatory division and legal and the LRRD, our department for catering to your question, and we have an initial recommendation to our board regarding the matter of provisioning. So, but I cannot speak or answer categorically today. But what is the CDA's official view on the matter? Because it is now being discussed at the board level. So later,
okay.
Yes,
Thank you.
later you will hear our comment.
Thank you, Direk.
Yes.
Or rather, Admin Ray.
Sir Gary, I would also like to give my opinion on that matter. Regarding on your request to relax our guidelines on the use of reserve funds, we are now in thorough study of that proposal. And I hope that before the end of this week, we will be able to come up with that proposal. And we're awaiting for the study from the Regulation Division. And I hope that proposal will not be violating any provision of our Cooperative Code of the Philippines, so that we will not be, because if it's not violative to any law, I think we can proceed with the relaxing of our guidelines on that matter.
Thank you so much.
The board is very much willing to accept the proposal to relax all these guidelines that could help the cooperatives, but we have to see to it that we are not violating any laws. That's all that I can tell you right now, Sigar.
That's understandable, ASEC Vidal. Thank you.
Thank you.
Okay, thank you very much. Moving forward, I would like to get your consent if we will extend another 15 minutes. That means we will close at 9:15. Is that okay for you? Still, we have some questions to answer, but I would like to invite Sylvia, because before the webinar, Sylvia shared with me that NATCO Network has, I do not know, it's NATCO Network who sent a regulatory proposal to the CDA. So I would like to invite Sylvia. Please, Sylvia.
Yeah, thank you very much, Lenny. On the provisioning, what we suggested to CDA, and I think they're looking at it, is the staggering of the provisions. Because I think when you look at the provisioning, there are things that you can consider. We have heard from Woccu that redefinition of the default time, and I think that is something which can be considered. If you do not change the definition of the default, then you can look at staggering the provisions. For the Philippines, the central bank already sent a circular that they will allow the banks to stagger the provisions for 5 years. So in fact, we are proposing that the cooperatives in the Philippines can look at these next 5 years as a way to clean up our system, because this is a time that we will really take seriously the provisioning, because right now the standards are very clear in terms of provisioning, but we are not sure that everybody has provided as required. So maybe we can take the next 5 years as a time to really be the step to clean up and provide as much as we want. So that means that if we stagger the provisions in the next 5 years, then we will, in a sense, reduce the losses that the co-ops will have, and that means there is not much which you will then charge to the General Reserve Fund. So that's the first suggestions that we made. On the General Reserve Fund, yes, we also submitted a proposal if we can use the General Reserve Fund for operations, because right now it's a restricted fund. So in the ICA chat room, we already had some exchanges of that with some of the members of the ICA. So I think these are very important discussions, and in the case of the Philippines, CDA has time in terms of the decision on the provision, because anyway, it's like if you can have that before the year end, then that can be considered when the audit will be done on the financial statements for 2019. So I think we have time to study what can be done, but we have already some examples, because the central bank has a 5-year staggering of provisions for the bank. So that's all I'd like to say, Ms. Lenny. Thank you.
Thank you very much, Sylvia. I think, wow, this is a very amazing webinar. We have a lot of participation. I was briefed by Sharon, who is monitoring all the questions that you posted on chat box. And she's saying that most of the questions were already answered. So most of them are related to annual general meeting or general assembly. I think, is it okay? We will close now, and anything that goes, you can always post on the website, on the Facebook of CDA if you have some more questions. I think Andrew is very open for any consultation that you may want to get from him. He has already posted his email address as well. I would like to summarize the presentation, because right now what is important for us is the sharing of Andrew, and I would also like to reiterate this one. definitely our CDA has done a lot of job, and if they are, I know that they are meeting online every time. I saw them on Facebook posting meetings. But there are things that we need to look around. I mean, there are areas that we need to focus on, especially the one that was presented by Andrew, saying that we need to provide guidance for our credit unions on the flexibility on the repayment of loan, flexibility on the on using the reserve fund, and flexibility on how do I say, flexibility on the loan loss provisioning, and flexibility, I think, on granting the loans to the members, because the scenario, the environment has changed drastically. I would suggest that we also need to look at the issuance of the PICPA, Philippine, which is the accounting standard body in the Philippines, because I am sure that they are also looking at how institutions or businesses would be able to handle these losses due to the COVID. We also need to look at the protection measures for our members. I'm sure that there is a government guidelines, but how do we put that guidelines not to detriment the well-being of our members? On the liquidity and the cash flow of the credit unions, we also need to provide guidance and tools to the credit unions. I think this is the role of the national associations. ACU will be working with PFCCO and NATCO to provide guidelines to credit unions on how they will manage cash flow, so that credit unions will not suffer too much because of the COVID. At the credit union level, there is also a need to provide guidelines for our credit unions on the impact mitigation on the financials of the credit unions. So we also need to provide guidance for them whenever they access for the package that is offered by the government. We do not want to indebted credit unions too much, because it's going to be an issue that we need to address for the long-term sustainability of the credit unions. Most of all, this time it's very important that our members are able to access financial services right in their homes. We have a lot of work to be done. Thank you very much, ASEC Vidal, for assuring us that you are working with PFCCO and NATCO to promote Kaya payment platform, because that's the platform that members can use to pay to access their savings account, and that's a platform they can use to pay their utilities in their home using their mobile phone. So we have to support our own. Kaya payment platform is our own. It's owned by the cooperative movement. ACU and Woccu is very proud to have the Kaya payment platform in the Philippines, because it's the only co-op-led payment system. And most of the countries in Asia are watching Philippines on how the Kaya payment platform will succeed. So based on your success, the payment platforms in other countries will move forward because of that. So we'd like to thank Andrew. Andrew is getting late now in the US. Thank you very much for being with us. Your input is so great. Thank you so much, and please do not get tired. We picked Philippines as the first country to have you because Philippines is experiencing difficult situation now. Country is locked down. People cannot go out at home, so credit unions are stepping out in order to help their members. So we also thank the cooperative movement, the leaders of the cooperatives. ACU is very proud of you, because we've been seeing every day that most of the cooperatives are even producing PPEs in order to donate to the frontliners, packing food every time. It's that I can see some cooperatives are saying this is my first wave, second wave, fourth wave food distribution to the members. It's a great job that you've been doing. Andrew said we need to tell to the world that we are doing this great job without even other people telling you to do that. It's innate to credit unions, and that's the beauty of cooperatives. Lastly, this webinar is for the Cooperative Development Authority. We, Woccu-Accu, and NATCO and PFCCO organized this because we want to reach out to you. NATCO has already forwarded the regulatory recommendations to CDA. And Accu has a platform for the regulators. It's called the Asian Cooperative and Credit Union Regulators Alliance. In our last September meeting, we have already decided that every September will be a strategy workshop with our member organizations and the regulators. This is an invitation for our CDA to be part of that and to be active in our regulatory alliance. Please take a lead role. Thank you so much, and have a nice day. Have a nice evening, Andrew. And I think Sylvia would like to say something.
Oh, we'll have a picture taking before they go.
Yes. Thank you so much, everyone.
Open your camera so we can get a snapshot. Okay, Paul. Snapshot, Paul, but we still have the slides. Paul?
I'll do it on my end po, ma'am.
Okay, sige. Are you all smiling now? Ikaw na mag-direct, Paul. There. Okay. Smile. Vulcan salute.
Okay. Thank you so much. Or Andrew, do you have any message? Last message, Andrew?
Andrew?
No, just thank you for allowing me to be here, and thank you to everyone for all that you're doing. It is amazing. It's incredible. And like you all say, God bless you, please.
Okay. Thank you so much, Andrew. God bless everyone.
Thank you.
We will heal as one. Cooperatives will be strong. We will heal as one.
Thank you.